Hey, what's up, guys? Keyzon McNeil here, your career wealth advisor. Just wanted to jump in here today with another episode. Today, I'm going to be speaking about life insurance. I'm going to talk about term insurance, and I'm going to talk about permanent insurance, i.e. whole life, or IUL, also known as Indexed Universal Life Insurance. So I've been calling YouTube channels, and there are so many different opinions on life insurance in general. And it's always interesting to hear people's opinions on life insurance, be it financial advisors, be it everyday individuals or quasi gurus who just, think they have the answers on life insurance. Now, today I'm going to go to a channel, I think it's Millennial Finance 101. Gentleman has a really strong YouTube page. I think he's a very smart guy. I actually followed the page, some of his tips, and kind of just look at some of his information. So this is in no means a knock on his skills or his knowledge or anything like that. Keep going, brother. I think you're doing a great job with your page. But when I see information that I feel, is off or just maybe misinformed, I like to jump in and correct, so that way moving forward, people can have a better idea, at least on my channel, of exactly what whole life or permanent insurance versus term insurance, and why people differ between the two. So I'm going to jump on this page here real quick, and I want you to see what his take on life insurance was, so that way you can kind of see his takes on it. Now you see, he says, do you need life insurance? Term versus whole life explained. So I'm going to start it, and I'll jump in like I always do to kind of correct as we go along, and we'll go from there. But again, shout out to Millennial Finance 101. Check out his page. I think he has some great information on there. Very bright young man. But let's get started.
Welcome back to my channel. My name is Min, and today I want to talk about life insurance. So you take out insurance on your house, your phone, your car, but what about your life? Stick with me as I explain to you the basics of life insurance and why you need it. So what exactly is life insurance? Well, it's like what the name says. It's insurance on your life. So imagine if you were to die tomorrow, what would happen to everything around you? Your house, your family starved. Let's say your wife wasn't working and she was relying on all of your income. Well, all of a sudden you're not there anymore, so that income is not coming in. That is a pretty stressful time that you don't want for your family. And so that's where life insurance comes in to help with that. So life insurance is a good replacement for income. It's a good way to pay off debt that person may have had. It also can pay for their funeral costs. And you also want to make sure that you have enough left over in the policy so that that person can live for the rest of their life without you. So buying life insurance can be confusing. Do you even need life insurance? What type of life insurance should you buy? How much should you buy? And for how long? Well, these are some of the questions that I'm going to be answering in this video. So do you even need life insurance? Well, I touched a little bit about this earlier when I said if you were to leave this earth, who would take care of your family? So in my situation, I have 3 boys and a wife. If I were to die suddenly, then all of that burden would be put on my wife. My kids are all still young. That is a super stressful situation that I would never put on my wife. And so for me, I would want my life insurance to pay out enough so that they can continue living the way they were living when I was around. Now, let's say you were single and you left this world. You're probably not going to have that big of an effect on someone, but still consider a small life insurance policy because somebody has to pay for your funeral costs. And so you don't really want to put that burden on your parents. So you can probably take out a smaller policy to cover just your funeral costs. And if you're really rich and you own a lot of things, you probably don't need life insurance. Your kids are probably going to be fine. Your wife is probably going to be fine.
So let's stop right there. Man said if you're rich, you probably don't need life insurance. That is incorrect. Okay. So if someone is rich, whatever that number is, and unfortunately that person passes away, and usually that person is usually the reason why they could be rich, right? So that person passes away, and now you don't have that money anymore that rich person brought into the household. Why would you think that they would not need some type of life insurance? That is the best time to pass along generational wealth tax-free. So what men probably doesn't understand is that the wealthy they already have some type of life insurance set up. Because if and when they do pass on, they're going to pass over money tax-free to their loved ones or beneficiaries. And in most cases, the wealthy, they have trust set up where that death benefit will go to a trust that'll take care of whoever it needs to take care of. So that's incorrect, Win, but let's keep going.
Probably don't even need this video. I'm just kidding. So the next question is, what type of life insurance should you be buying? Should you be buying a term life insurance policy or a whole life policy? And I'm going to make it very simple for you. Just avoid whole life policy altogether. It is one of the worst products out there, and it's going to cost you an arm and a leg. The guaranteed payout in a whole life is not going to be worth it. So if you work,
so Win is almost right, somewhat right, but at the end he's very wrong. So whole life insurance, he's correct in there are fees. Just like there are fees with your 401k and your mutual fund and your stock. There are fees, of course. What he doesn't understand is after a period of time, those fees don't go up; they stay the same. Unlike your 401k, mutual funds, that a lot of people have with these advisors, they continue to climb, and a lot of times you're paying fees on your gains that you haven't even taken out yet. But then when you take the money out, you've paid fees on money that you really didn't even have a chance to access. But back to Wynn's point about there being high fees and it's costing you an arm and a leg. Now, if you're just dealing with general life insurance, like most the population is, they're just dealing with general life insurance, and usually it's not designed. Notice I said the word designed. It's not designed with the cash value aspect in mind. So in that regard, you're going to be paying for your death benefit throughout the course of the policy, but it's for a death benefit. Okay. Yes, maybe a smaller cash value will grow, but over time, it's not going to be as attractive to you from a cash value standpoint because it was probably never designed to be heavy on cash value. So Wynn probably doesn't understand cash value life insurance, and he's probably talking about the old way of doing life insurance. Okay. And so I'm just going to say that's just ignorance there. He just doesn't know. So no problem. Let's continue.
were to go out and talk to an insurance agent, they will probably try to push you on a whole life policy. And they're not doing it because it's the best for you. They're actually doing it because they're trying to get commission and they're trying to line their own pocket. Now, whole life agents are trained to sell you on all the positives of whole life. And they'll tell you that it's an investment, it builds cash value, there's guaranteed payout. Even if you died at 90 years old, you're still going to get that payout. But one thing to keep in mind.
So let's stop there. When it's partially right there, 95% of the life insurance agents selling life insurance today really don't understand the type of policies they're selling. So they'll put a client in a policy, maybe not a term, because term just means term. Okay, we'll get into that in a second because he's going to touch on that as well. But a properly designed whole life policy, okay, what I mean properly designed, I mean structured to that client's needs. So when Wen says they're going to try to push a whole life policy on you, and they're going to probably say something you don't need. One of the things that we do here at American Classic Agency, and all my agents, I train them to do this as well, is that we do a needs analysis. Let's talk about why you need life insurance. Let's talk about what your reason for buying life insurance is. In some cases, it could be just because they just bought a house and they want to, if an event happens and they pass away within that time, they want to make sure that the spouse or whoever's left with the other part of the mortgage can, if they decide, they can pay the house off, or they can continue to pay the mortgage without that burden. So that's a needs analysis, kind of unfolds all that, right? But in most cases, when we do a needs analysis, we're finding out things like debt. We're finding out how much income they're earning. We try to do an estimate on future income earnings and things of that nature. So this is what separates just life insurance agents versus life insurance advisors who actually do a intake meeting with their clients to make sure, you know, they know what they're doing, the needs analysis. Wen's not totally wrong here, man. There are some agents out here that they just want to make a commission, you know, and, you know, they're going to put you in a product where they can make the most commission. There, I said it, you know, and the reason why I know this to be true is because a lot of clients that I come across, I do a free analysis of their current insurance policy, and I can do that for you. Just hit me up, just so you can know what you have. And when I'm looking at their policies, they don't really even know what they have. You know, some thought they had term for 30 years, but turns out they have a 20-year term that's going to expire and it's going to balloon. You know, so they have all these different things. They thought they had a cash value whole life policy that was going to build cash value, but turns out they do have a whole life policy, but it was not designed to build cash value. Let's continue on.
Line with a whole life is it's going to cost you significantly more, and I'm talking about maybe 20 times more than the term life premium. So let's say you're only paying $40 a month. Well, a whole life policy can cost you over $800 a month, and most of that $800 a month isn't even.
So when he says its whole life can cost you about $800 a month, you know, that's just totally false. You know, the policy, if designed properly, is going to cost based on what your budget is, right? Based on what you want to spend. You know, I have clients who have whole life policies for $100 per month. They're going to pay on it for 10 years. And guess what? After that, they're going to stop paying on it forever. And it's going to go out to their life expectancy. So the whole thing of all these fees and all that, it's just false. It's false. You know, so Wynn's definitely wrong there.
And going towards your cash value. A lot of it is going towards the fees and commissions that the agents are making off of you. And then only a small portion of it actually goes to your cash value.
So let's stop there. Let's talk about the agents, how they are paid. The agents are paid directly from the insurance carrier. It does not come from the customer. So Wynn's wrong there. Now, if you design an insurance policy, if it's designed properly for cash value, the agents, believe it or not, they're going to make the least amount of money. You know, see, an agent can sell you a $300,000 life insurance policy, whole life, and he or she could make, let's say, $2,500. I'm just making a number up, right? Or he can sell you the same death benefit, okay? Same death benefit. I'm sorry, not same death benefit, same premium amount. So you're paying the same $300, okay? But agent may only make $500. It's all about the design. And when you have a properly structured life insurance policy, you know, the agent has done right by you. That means they're not going to make a lot of commission in this particular example because they designed it for cash value. Okay. So when he just doesn't know the industry and he's just kind of going by probably his research on the internet or what have you. But let's continue on.
Remember how I said the premiums are really high? Most policyholders end up canceling their policy after 10 years. That means that all of that money they've been paying to commissions, that cash value hasn't even grown at all. And there are really smart people out there that have already done the math on all of this. And even if you were,
and that's somewhat true. I don't know about people canceling after 10 years. Most of our policies are designed. Actually, I just did one last week where I designed it that it's a 10-year pay after 10 years. The way it's structured to build cash value. After 10 years, guess what? The customer doesn't even have to pay on it anymore. And it's going to continue to grow. It's going to build some cash value. Great. Not as fast as it would if he had continued to pay on it, but it's going to continue to build that cash value. Most importantly, the death benefit is going to stay intact through life expectancy, and that's 107. So for this particular example anyway. But so he's absolutely wrong there. What he's doing is he's lumping in one insurance policy and he's saying that's how they're all done. And it's just so not true. It's just so not true.
were to calculate the return on investment, you're probably looking at 1 to 2%, which is terrible for any investment. So the insurance agents make a ton of money and you get nothing in the end. You're better off just going with term life. Let me explain why. Remember how I told you insurance is just for peace of mind? Well, that's why you have insurance on your house and your car. Those insurance policies are not investments. So you either use it or you don't. And let's say you had full coverage on your car. At some point.
So Wynn said that life insurance is just for peace of mind. That's just not true. Ask Walt Disney what his life insurance did for him. Ask the gentleman who started Stanford University, what did his life insurance do for him? Ask J.C. Penney what his life insurance did for him. You think he bought that policy for peace of mind, or those individuals, or the young lady who started Pampered Chef? Ask her if she just bought her life insurance for peace of mind. No, these individuals started their businesses with their life insurance policy. That's right. They took proceeds from the insurance company that was backed by their life insurance contract. Their life insurance contract gave them the right to have a certain amount of money, and the insurance company gave them a certain amount of money to do what? Start their businesses. So if Walt Disney, I'm sure you guys have heard of Disney World and Disneyland, if he had thought that life insurance was just for peace of mind, do you think that he would have used it to start Disney World? No. So this is just an example of when men not really knowing, in my opinion, what he's talking about.
Well, your car is going to be so old that you don't need full coverage anymore, so you're going to drop some of the policy. And if you could, you probably would drop insurance altogether if your state allowed it. So term life is no different. So term life insurance is a time-based policy that pays you in the event you die within a certain time frame. So let's just use a simple example. Let's say you bought a term life insurance for $50 a month for 30 years that paid out $1 million if you were to die. So let's say you were 30 years old. If you were to die before you turn 60, then that means that your beneficiaries will get a check for $1 million. It's that simple. Now, if you don't die and your 30-year term runs out, then you're out $18,000 and nobody gets paid out. But remember, you had peace of mind for those 30 years in the event that you died. And so your family was protected that entire time. Let's say you were traveling and caught some kind of illness and you died.
Let's stop right there. He mentioned it in regards to term life. So he's saying that you have term life and it's for a period of time. Term is kind of like renting. So you have it for a period of time. So in this example, if you have a 30-year term policy and you are still living after 30 years, the term expires. So it's done, right? And some people buy term for different reasons. They buy it just for that what if in between time. Like my example with someone making a major purchase, such as a house. They may want to have, they bought a 30-year mortgage. They may want to get some 20-year term on it, maybe even 30-year term. In the event something happens to them while they're still paying their mortgage on their home, that's, so that's a great, a great reason to use a term policy, in my opinion. But what Wynn's driving home the point of that it's cheaper insurance. So, no harm, no foul. You only out $18,000 and what have you. But I don't think he really understands why people would get term. I don't sell a lot of term in my product just simply because I have other options that I believe that money you're spending, I don't think you should just lose out on it, But, in some examples, some cases, term is called for.
If it's within those 30 years, then that $18,000 was money well spent. Your family will get $1 million. They can pay off their house, they can pay off their debts, and they can live off the remaining money without having to worry about the next paycheck coming. So the next question is, how much life insurance should you buy? Well, you don't want to go crazy and try to buy a $5 million policy. Let's say you're living off of $50,000 a year right now for your family. You should only buy 10 to 12 times that amount. So let's just use 500,000 for easy numbers, which is 10 times that amount. And so you would go and buy a policy for $500,000. Now, one thing to note about this $500,000 is in the event that you do die, that $500,000 is actually tax-free money that's paid to you from the insurance company. Now, you can be a little bit more aggressive. Let's say you did the math and you said, okay, I have a $500,000 house I need to pay off. I have kids' schooling that I need to pay off. So you can factor all those numbers in as well. And let's say you get to $1 million or $2 million. Kind of depends on your situation. You can go and buy a policy for that amount. Remember, the whole point of life insurance is if you die, then your family is covered for the rest of their lives. And so you want to make sure things like debt is paid off, your kids' college tuition, your homes, your cars, and also have a little bit of leftover money so that they can continue living the life that they were living. So given that term life is a time-based policy, next question is, what length of time do you buy? So if you're like me in your 30s, then you're probably going to buy something like a 20 or a 30-year policy. It kind of depends on your situation. So in my case, I have a 1-year-old, and I want to make sure that he gets to grow up and do all the things that everybody else gets to do. And so I want to make sure I'm covered for at least 20 to 30 years. If you're a little bit older, let's say you're in your 40s and your kids are maybe 10 to 20 years old, then most likely you're only going to need a 20-year term life policy. Just remember that whatever term you end up picking, you get to lock in that rate for that entire term. Another thing that can also help you determine the length is if, let's say your house is about to be paid off in the next 10 years. You may not need life insurance after your house is paid off. So you can probably pick a shorter term in that case. But if the prices are reasonable, then going with a longer term isn't the end of the world. So once you figure all of that out, you're probably asking, where do I buy life insurance and how much does it all cost? Well, you can go the regular route of finding an insurance agent and they can write up a policy for you. Or you can go on a website like lifequotes.com. I'll leave a link for you guys in the description. They'll let you put some basic information in about yourself, like your age, your general health, and things like that. And once you do all that, they'll give you quotes on all kinds of term life insurance policies, even whole life. And so you can look at all the different prices from a 20-year, a 25-year, or a 30-year, and you can kind of decide which policy is right for you. Now, you may get some people that will tell you that term life is a waste of money. And while that is true, just remember, if you don't get a payout, that means that you actually lived through that entire term. So let's say you paid that $30 a month for 30 years for that $1 million policy. That works out to be $10,800 that you paid for that policy. And to me, that's money well spent in the event that you do die.
So Min's obviously a term guy, right? So he's saying that you outlive the policy. Hey, that's a great thing. You outlive the policy. Yeah, you're out of $10,800. But what about what happens if now you outlived your policy? Okay, policy just ended, and then something happens to you the next day, right? So those are instances where I don't recommend term. That's why I'm always a IUL or whole life guy. Okay. I think he is more of a buy term, invest the difference type of guy. He's probably a Dave Ramsey disciple. No shade or anything like that. It's just what it is. Where he's thinking spend the least amount on life insurance and then go invest the rest in the market. So to shut all that down, just look at what we're going through right now with, the way the nation is right now with with the pandemic, right? Term insurance or no insurance at all, you won't have any money to live off of. You won't be able to go get your cash value and be able to pay your mortgage like so many of my clients have been able to do, because they may not have qualify for a stimulus, which is whatever, so they're able to take money from their cash value because it's their own bank is what we preach here, and they're able to pay their bills and still live their life, because unemployment's taking forever, and we know that you can't live off unemployment anyway. So these are things where life insurance show value. People think because they hear the word life insurance that it's just about dying, and it seems that's what Min thinks. I think he's thinking it's all about dying. He doesn't even understand the other intricacies and other aspects of a whole new element to cash value. He doesn't understand that, and I would love to have a conversation with him just so I can have him understand, exactly how he could possibly benefit, from an IUL policy or a whole life policy and still get the death coverage, that he's probably seeking. So this is just a situation where, I disagree with Min 100% with his take on term versus whole life explained. So let's continue on.
Your family's going to get a check for $1 million and they'll go on and live their life without having to worry about money. So if you think about it that way, it's only a waste of money if you don't die, which actually is a good thing. Hopefully you never have to use your life insurance payout and you get to live a long, healthy life. And by the time your policy ends, you'll probably be gray and retired, living on the beach somewhere, enjoying your retirement accounts and maybe Social Security. And think of it this way, even if you died after 60 and your term policy ends, you're probably going to have a ton of money in your brokerage account. So your kids and your wife.
See, just answered it for me. He's a buy term, invest the difference guy. Hey, you're going to be retired. You're going to be on the beach living off all the money in your brokerage account and probably some Social Security. So what do we tell individuals who just lost 35, 40% of their 401k portfolios because of what's going on in the nation right now, that were looking to retire this summer? They're not going to be on the beach living a great life and off of Social Security. They just lost 35, 40% of their portfolio. Now, what we do is we want to also build something for them cash value wise, because the market is an investment, people will tell you, oh, the market's up historically, it's up over time. But tell that to someone who just lost 35% of their portfolio based on what's going on right now. Not just one person, most of the country, period. Everyone's down. Now think about those individuals. Or as a matter of fact, think about yourself. If you're looking to retire this year and what we're going through happened to you and you just lost a ton of money in the market. So where's that beautiful brokerage account that Min's talking about now? No, because you invested and it seems like he says it so freely. You're going to have all this money. And how does he know that? How does he know that that's going to happen? There are no guarantees. The market is not guaranteed. As a matter of fact, like I've said this on previous episodes, see, your 401k, guys, it was never meant to be a total solution to retirement, okay? It was meant to be a part of a three-headed monster. And that means it was meant to go with a pension and Social Security. So then they add this 401k, you have a three-headed monster. And it was meant to be a supplement to your retirement. Look it up. 401k Act and started in 1978. Look it up. Just Google 401k. Matter of fact, Google was a 401k ever meant to be a total solution to retirement? Don't take my word for it. Do your own research. Look it up. It was never invented to be a total retirement solution. So why is it that that's all you hear about now? That's all they push. 401k, max out your 401k. Do this in your 401k. Man, stay in your 401k. That's how you're going to retire. No, there needs to be an asterisk there. It's a supplement to retirement. That's all it ever was meant to be. But what happened was when companies started to see that they didn't have to spend all this money in pensions now, the government, they all got together, companies, and they said, well, let's just push 401ks. Because one, the companies get tax benefits. They don't have to contribute as much. They can even throw out this max to you, this match to you. You know, they're still saving money. They get credits on that. Yes, your company gets a kickback for doing matches, okay? But it's still not meant to be a fail-safe for retirement, period. So here's an example, because men likes to use this $1 million thing for insurance. Let's say you have $1 million, okay? $1 million when you retire in your 401k, all right? Now, your RMDs don't kick until age 72. That's required minimum distribution, right? So let's say you have $1 million. You want to start taking income at 65, okay? So if you have $1 million, and let's assume you're at the lowest, let's say at a low tax bracket, let's call it 25%. Now, 25% of, let's say, of $1 million, you're going to take, good for 20 years, you're going to take, that's $50,000 per year. Not so bad, right? Now that 25% tax is going to put you around 36,500, 38,000, something like that, right? So now you're at 38,000. Okay, let's also throw in Social Security, because Social Security is going to probably, after taxes, give you about $15,000, okay? So we're right back at about $55,000, okay? So now, for the next 20 years or so, give or take, could be a little less, you're going to live off $55,000, period. That's if you get to $1 million in your 401k. How many of you right now have $1 million in your 401k? Skip that. I'm not going to pick on you because of this pandemic, but even before the pandemic, did you have $1 million in your 401k? And those of you who did, you don't have it no more because of this crap we're going through. So even if you are blessed to reach $1 million, congratulations. But now, how are you going to live off $55,000 a year for the rest of your life and live this great, comfortable retirement? I'm not saying it can't be done, but is that really what we want to do? Retire off less than we're making right now? Just not, you know. And if you're not even making over 100, 150,000 right now, you're not really even probably maxing out your 401k. If you are, great, but it's going to be a tough uphill sled to get to $50,000, which is $1 million in your account. Let's let men finish up
I
here.
would just take that and live off of that. You actually don't need the life insurance policy payout anymore. So there you have it, guys. Term life insurance is the way to go. Remember, this is insurance, not an investment. Now, if you do want to do some investing, it's better to do it with an actual investment account. Put that money you're saving into a low-fee index fund.
Okay, so again, men's a term, by term, invest the rest guy. I call him Dave Ramsey disciples. So he's one of the guys that wants you to get the cheapest amount of insurance and invest the rest in the market. So again, I use that example. If you were investing the rest in the market right now, a lot of us would be pissed. So what's wrong with diversifying a little bit? Get your 401k, keep that going, that's cool. But what about supplementing that retirement? What about starting an IUL or whole life policy that's guaranteed 4% interest? Not just simple, compounding interest. Then the icing on the cake is, yes, there is a death benefit, but it's not designed with death benefit in mind. It's designed with cash value in mind first. So you know, again, this is nothing against men. I think that's a wonderful channel. Um, you know, but when I come across certain channels and I feel like the subject matter they're speaking on is a little off, you know, with their facts, I thought it'd be a great idea just to kind of correct, because I want you guys to have all the information. That's what we're about here, this channel. I want to make sure you have all the information on all type of financial hacks, and especially life insurance, you know, and then also that career advice that I drip on you guys every now and then. Other than that, I hope everyone is staying safe. Hope you guys have a wonderful, wonderful rest of your week. And I will always see you guys on the next episode. Peace.